Before I explain further about the payroll and personal cycle, let me share with you what is meant by payroll and personal cycle. The payroll and personal cycle involve process for managing employee compensation to ensure accurate payment and comply to legal and organizational requirements. The first assertion in payroll and personal cycle is occurrence. So what is occurrence? Occurrence in payroll and personal refers to ensure payroll payments are made to existing employees for actual work performed. Next, we move on to audit objective. The audit objective is to check whether recorded payroll payments are for work actually performed by existing employees. There are 4 types of class of transaction and relevant account involved in the cycle. The first account is payroll cash accounts. This account allows the auditors to verify the cash payment recorded were actually made to employees for service performed. Secondly, payroll expenses accounts. This account enables the auditors to ensure the expenses recorded were actually for payroll costs and prevent overstatement of expenses. Next, payroll withholding accounts. This account authorizes the auditors to check the withholding recorded were properly deducted from employees' pay and correspond to actual authorized deduction. Lastly, payroll accrual accounts. This account allows the auditors to verify the accrual accurately that reflect employees' actual work obligation. In this cycle, there are 3 types of internal control, which are authorization, documentation, and segregation of duties. Under authorization, the time card should be approved by the supervisor to ensure hours work are valid. The test of control, TOC, and the test of detail, TOD, for this internal control are the auditors may check the accuracy of the time recorded on time cards and compare the hours in specific payroll entries with time cards. Next, for documentation. Maintaining proper HR files and authorization ensure that only legitimate employees are paid. The TOC for this internal control are review HR policy and procedure to ensure they require maintaining employee records and inspect records to ensure new hires and termination are properly documented and authorized. The TOD is confirming the presence of all required documents in the personnel files. Lastly, segregating responsibility helps the company to prevent fraud and errors. The TOC for this internal are by reviewing the organization chart to verify that different individuals handle different tasks and observing employees to confirm they are performing their assigned duties. The TOD is by ensuring no single employee has control over all payroll process. The audit evidence used to perform both tests of control and substantive tests includes human resource record, time record, job time ticket, payroll transaction file, payroll journal or listing, payroll direct deposit or check, and payroll bank account reconciliation. All the audit evidence that mentioned before are to support the audit opinion in the payroll and personnel cycle. Lastly, possible misstatement. A possible misstatement scenario in the payroll cycle are misstatement and overstate amount in payroll expenses account.
Now, we will continue with the completeness part of the payroll and personnel cycle. I'm ADLIN and I'm your next presenter. First, the assertion of payroll is that existing payroll transactions are recorded, whereas the audit objective is to check whether the existing payroll transactions are recorded. Next, we will move on to the topics of the class of transactions and relevant account. First of all, here we have a payroll cash account. This account reviews all aspects of payroll transactions from expenses and liabilities to actual cash disbursements. Then, we have all payroll expense accounts that review all payroll-related transactions and their recording in the appropriate accounts. Next, we also have all payroll withholding accounts. Here, all withholding-related transactions will be reviewed and reconciled. And lastly, all payroll accrual accounts where all transactions and balances related to earned but unpaid payroll expenses will be reviewed. Under completeness, there are two internal controls involved, which are documentation, where payroll checks are pre-numbered and accounted for, and next, segregation of duties in which the bank accounts are independently reconciled. Now, we will proceed with the audit procedure. Audit procedure is divided into two tests, which are the control test and the substantive test. For the test of controls, it will be done by accounting for a sequence of payroll checks and next discussing with employees and observing reconciliation. As for a substantive test, it will be done by reconciling the disbursements in the payroll journal with the disbursement on the payroll bank statement and last, proving the bank reconciliation. Then, there is audit evidence of completeness under payroll and personal cycle. For example, there is payroll transaction file, payroll journal or listing, payroll master file, payroll direct deposit or check, and payroll bank account reconciliation. Last, before we move on from the completeness topic, we have possibilities misstatement. Under completeness, there is a possibility to have misstatements and understated amounts or transactions in the payroll journal or listing.
Next, we move on to the accuracy. So, what is accuracy? Accuracy is recorded payroll transaction at the amount of time actually worked and at the proper pay rates. Also, withholdings are correctly recorded. So, what is the objective of the accuracy? So the objective or the audit objective for the accuracy is to check whether recorded payroll transactions are for the amount of time actually worked and at the proper pay rates. Also, withholdings are correctly recorded. So there are four classes of transactions and relevant accounts based on the accuracy assertion. The first one is payroll cash accounts. Payroll cash accounts, it reflects on the cash outflows for payroll activities and it can provide a clear record of how much cash is being used to pay to the employees. Next one, all payroll expenses. This reflects on the total expenses that incurred by the company in relation to its payroll obligation and provide a comprehensive view of the financial impact of payroll on the organizations. The third accounts is all payroll withholding accounts. These accounts accurately track on the amounts withheld from employees' paychecks and ensuring comply with tax and regularity requirements. It also provides the transparency regarding deductions that made from the employee's gross earnings. Last one, all payroll accrual accounts. These accounts are accurately reflect on the expenses that have been earned by the employees during a specific period but are not paid until a later date. It also ensuring that financial statements accurately represent the liabilities associated with payroll obligation. So for the internal control based on the accuracy assertion, there are two internal control. The first one is payroll calculations and amounts are internally recorded. By verifying calculations internally, the organization will minimize errors and ensures that the financial data including payroll amounts are accurately recorded and reported. Next, batch totals are compared with computer summary reports. By comparing batch totals with computer summaries, the difference can be identified and this will ensuring the accuracy and completeness of financial records and reports. Next, we move on to the audit procedures. Audit procedures have two procedures. The first one is test of controls and the second one is substantive test. So the first one is test of control. So test of control have the two tests. The first one is examine indication of internal verification. By examining indication of internal verification, auditor assess whether control are operating effectively to ensure accurately financial data recording and reporting. The second one is examine file or batch totals for initials of data control clerk and compare totals to summary reports. By performing the examination, auditors can verify the accurately and completeness of data processing, and it will ensuring that all transactions are accurately recorded and summarized. For substantive tests, we have 3 tests. The first one is recompute and recalculate hours worked from time records. This will ensure that the reported hours are accurately recorded, minimizing errors in payroll calculations and ensuring comply with labor regulations. The second one is compare pay rates with contract approval by BOD or other sources. By comparing pay rates with authorized sources, it ensures that employee compensation is accurately calculated and comply with contractual agreements and internal policies. And the last one is recompute gross pay. It ensures that the total earnings before deductions such as tax are accurately calculated and recorded. Next, we move on to the audit evidence. So there are 3 audit evidence based on the accuracy assertion. The first one is deduction authorization form. The completeness of deduction authorization form provide an evidence that deductions from employees' wages that are accurate, supporting the accuracy assertion in payroll cycle. The second one is rate authorization form. The existence of rate authorization forms provides an evidence that pay rates used in payroll calculations are authorized and accurate and ensuring compliance with the policies. And the last one is payroll tax returns. The accuracy of payroll tax returns, including the amounts reported with withholding and employee taxes, provides an evidence that payroll taxes are accurately calculated and remitted with tax authorities. Last part, for possible misstatement, in the trial balance there are misstatement and overstated or understated amount of accrued payroll taxes and payroll tax expenses. Overstatement might occur if the accrued amounts are recorded at a higher value than they should be. Potentially, it can inflate costs or liabilities. For understatement, could be happen if the accrued amounts are recorded at the lower than the actual, which lead to the understated expenses or liabilities.
Let's take a look on the next assertion, which is cut-off or timing. The payroll and personnel cycles cut-off assertion makes ensuring that payroll transactions are reported within the appropriate accounting period. Accordingly, liabilities, payroll expenses, and associated transactions are recorded as soon as they arise, in accordance with the time periods during which the workers completed their work or the liabilities were created. Audit objective on this particular assertion is to verify that the payroll transactions are documented on the appropriate periods or dates. Then, depending on cut-off assertion, there are a number of classes of transactions and relevant accounts that are listed below. First, payroll cash accounts. This is to ensure that cash disbursement for payroll are recorded in the correct accounting period. Second, all payroll expenses account. This is to ensure that expenses are recorded in the period in which the employees earn their wages. Third, all payroll withholding accounts, which to ensure that taxes and benefits are recorded in the period which they are deducted from employee wages. Lastly, all payroll accrual accounts. This is to ensure that wages and related liabilities for work performed but not yet paid are recorded accurately. Next, we will move to internal control related to cut-off assertion, which is focused on ensuring accurate period and processing. The internal control consists of first, documentation, where it is the transactions were to be recorded in accordance with procedures as soon as the payroll was paid. Second, verification, which the dates are verified internally. The following audit procedures are used to test the cut-off assertion in payroll and personnel cycles. First, test of control. Examine procedures, manual, and observe when recording takes place. Examine indication of internal verification. Secondly, substantive test, which is compare date of recorded payment in payroll journal with date on cancelled check or direct deposit and time card. Second, compare date on check with the date check cleared the bank. Under cut-off assertion, audit evidence comprises of first, a time card, which is a document that details when an employee begins and ends work within a pay period. Secondly, a payslip, which is a record that shows when an employee is paid their salary. Lastly, the payroll register, which keeps track of the total amount paid to workers each pay period. Finally, as per the cut-off assertion, misrepresentation and exaggerate or underestimated transactions in payroll journal or listing owing to fraudulent hours indicated in the time card are probable forms of misstatement that may arise.
Next, we continue to the last part, which is assertion and the objective of classification payroll. Classification payroll is where payroll transactions are correctly classified, and the objective is to check whether the payroll transactions are correctly classified. There are 5 classes of transaction and relevant accounts of classification payroll. First, bank account. Second, purchase return account. Third, purchase discount. Fourth, creditors account. And the last one is expenses account. What is internal control of the classification payroll? The internal control of classification payroll is documentation, where an adequate chart of accounts is used, and verification monitoring, where an account classification are internally verified. The audit procedure of classification payroll contains 2 elements. First, test of control, which is to examine procedures, manual and charts of account, and to examine initial on general ledger account indicating comparisons. Second element is substantive control, which is to compare classification with charts if accounts by referring to vendors' invoice. There are 5 elements of audit evidence of classification payrolls. First, purchase requisition. Second, purchase order. Third, receiving order. Fourth, cancel check. And 5, vendor invoice. What can be possible misstatements of classification payroll? The possible misstatements that can be in classification payroll is unrecorded or non-existent accounts or misstatement itself.